Hello everyone, and thanks for checking out our channel, where it's our goal to create a community of informed traders and investors by sharing technical analysis and collaborating together to ace the charts. Be sure and check out the links in the description of this video to join our online community on Slack and to subscribe to our Twitter account where we provide daily technical analysis. Also, if you find this video helpful, please like and subscribe to our channel so we can provide more free content. We look forward to working with you, so let's get started. The following lesson is a beginning guide to learning candlesticks. Traders and investors have a countless number of indicators that they can use to help them make decisions. This can often make the chart look confusing or overwhelming to a beginner. This image is an example of a very busy chart using several indicators. The good news is you don't have to use or understand all of them to read a chart. Let's take a look at the same chart now without the indicators. We have removed all of the indicators now, and what we are left with is just the price action represented in candles. This chart is the price action of Bitcoin on the daily time frame. Because this is a daily chart, each candle represents the price movement of one day. If we were looking at an hourly chart, each candle would represent 1 hour. On a 15-minute chart, each candle would represent 15 minutes. On a 5-minute chart, each candle would represent 5 minutes, and so on. At the bottom of the chart, the time is displayed in days. On the right-hand side of the chart, the price is displayed in US dollars. Looking at the chart, you can see that some of the candles are green and some of them are red. Some have wicks at the top or the bottom of the candles, or both. Our first step to understanding technical analysis is understanding the candles that make up the price action that you see on the charts. So let's look at that. A green candle is said to be a bullish candle, which means that price went up during that time period. A red candle is said to be a bearish candle, which means that price went down during that time period. The real body of the candle is between the opening price and the closing price. The upper wicks of the candles indicate the highest price during the time period, and the lower wicks of the candles indicate the lowest price during the time period. The size and shapes of the candles can provide valuable information to a trader. Another type of candle that you will see on a chart is called a doji candle. A doji candle is one that has very little or no real body. The two doji candles on the left indicate that the price opened and closed very near the same levels. Both of the candles on the left, according to their shape, would indicate an indecision in price movement, even though one candle is red and the other is green. This is because the wicks are of equal distance on the top and the bottom, and the price opened and closed at almost the same level. The two doji candles on the right would indicate something entirely different. The green candle with the long lower wick would indicate that when price dropped lower, there was quite a bit of buying that occurred that pushed the price back up. Long lower wicks like this could be a bullish sign and may indicate further upward price movement. The candle to the far right with the long upper wick would indicate that price moved up, but there was quite a bit of selling or profit taking that occurred that pushed the price back down. Candles with long upper wicks of profit taking like this can be a bearish signal that indicates further downward price movement. In each case mentioned, the previous price action must also be considered. Looking back at the daily chart of Bitcoin that we showed earlier, you can see an example of a candle with a long lower wick, and you can see that the price subsequently moved up after this candle. You can also see a candle with a long upper wick of profit taking. This long upper wick was an indication that price was done going up in the near term. From there, the price went into a range where it continued to tighten up. At the end of the tightening range, you can see two indecision doji candles before the market decided which direction the price would go. Oftentimes, the wicks of the candles can indicate a support or resistance level on the chart. Looking back at our chart, we have drawn a horizontal line that crosses through several wicks. Notice that each time the price moved below that line, the bulls bought the dip and pushed the price back up before the close of the candle. The fact that there are several wicks below this line indicates that it is a level of support the bulls are defending. Traders often identify support levels and resistance levels on the charts to help them decide when to buy or sell assets and where to set their stop losses. We will discuss more about support and resistance levels in later videos. This concludes our beginning guide to candlesticks. It should be noted that there are many different types of candlesticks and candlestick patterns that we have not discussed in this video that can be helpful to learn. If you have any questions or comments, we'd love to hear from you, so leave them in the comment section below. If you would like additional information on this topic, please subscribe to our YouTube channel where we will be posting more content. Also, check out the links in the description of this video to join our online community on Slack and to subscribe to our Twitter account where we provide daily technical analysis and educational material.